Welcome. Thank you, everyone, again, for sticking around for this morning session. We had a wonderful session in this room with Sandra Navali and Sharon Joseph. We learned a lot about economic connectedness and what the Harlem Boys and Girls Club is doing in terms of addressing various social problems in our local neighborhood. We're going to continue that theme with this session. We're joined by three amazing panelists, and we're going to be talking about the innovative tools today that we're seeing along the theme of optimism that we ended on in the last session to address the racial wealth gap and the theme of building an equitable economy through business. My name is Dan Wang. I'm the Lambert Associate Professor of Social Enterprise here at Columbia Business School, and I'm one of the faculty co-directors of the Tamer Center for Social Enterprise. And before I begin, I would like our panelists to do their own introduction because I will not do them justice, but I do want to say a few words about why this topic is particularly interesting to me. It's certainly interesting from a scholarly perspective because I'm a person in my research line of work who studies business and society, but it's also personal to me. And one of the reasons why, and for the MBA students in the room, you literally heard me say this yesterday in our last class, but just for background, my father is also a professor, and his area of research is African American history. His specialization is in the Civil War and Reconstruction era of the United States, and he loves talking about it, like seriously. Do not get him started. I was talking to him the other night, and I told him that I was moderating this panel about the racial wealth gap in the United States with three amazing panelists, and before I could continue describing it, he interrupts me, which is totally on brand for him, and says, the origins of the racial wealth gap in the United States has its roots in the 19th century. And then here I thought, well, here comes another history lecture. But then he pointed me to a new research paper. This is a working paper, not yet published, by a group of economists, which he never does because he's a historian. So I won't get into the details of the paper, but it traces the roots of the racial wealth gap in the US to the Reconstruction era of the 19th century, when once enslaved people, for the first time, were permitted to earn incomes and build wealth and own property. And for a while, there was progress. But there was a ceiling to this progress, and that was reached in the 1930s. And since that time, pretty much, the racial wealth gap in the United States between black and white people in particular has widened. And what's more, since the shooting of Michael Brown in Ferguson, Missouri in 2014, and especially in the past 2 years, what has surfaced into the public sphere is a widespread awareness of the sheer volume of structural forces that are making it harder to close this gap. So our panel is convened here today to discuss not just the roots of the racial wealth gap, but why all of us here should be hopeful about the innovations to address it. And so going from your perspective, left to right, we have Wole Coaxum, the CEO of Mochify, and we also have Kelly Ifill, a 2017 grad of the business school, who is the founder and CEO of Guava, and Jenny Tolan, who is a 2014 grad and is the co-founder and leader of Level. And just to set the stage, I want to contextualize the racial wealth gap with some numbers, just to give everyone a sense of the gravity of the topic today. So if black households held a share of the national wealth, that is the total wealth accumulated in the United States, in proportion to their share in the US population, it should amount to $12.68 trillion. But the actual sum held by black people in the United States is $2.54 trillion. The 400 richest American billionaires have more total wealth than the 10 million black American households combined. In other words, for every $6 in wealth that the average white American holds, a black American holds $1 in wealth. So when we talk about the racial wealth gap in this country, that's what we're talking about. Now, that's just the bird's eye view, just to give everyone a sense of the situation. But the numbers that describe the racial wealth gap also hide how consequential the issue is at a deeply personal level. Each of you here is deeply motivated by a mission to address this problem. And as a means of introduction, can I ask each of you to talk about your personal motivation for founding and leading your organizations? Maybe Jenny, is it okay if we begin with you?
Sure, everyone can hear me. There we go. Thank you so much, and I'm happy to be here with you all. My company, Level, is a Columbia Business School founded company, and I actually led the Social Enterprise Conference when I was here back in 2014, so nice to be here. And I'm glad I didn't realize that about your father, because I also feel like we all need a history lesson, and hopefully it's something you imbue. As someone who was educated in the United States, I did not learn the real history that impacts the racial wealth gap in any way, and I am still learning it every day, and I think we'll touch on that in later questions. But in terms of Level, our company, Level is the first and only truly multiracial professional women's network coming together to invest in Black women. And the origin story is, I don't know if some of you might know, there's been a huge rise in professional women's networks, and they've raised a lot of money, and they've attracted a lot of women for various reasons, right? The Me Too movement, and the difficulty of COVID and being a woman, and there's Chief and The Wing, and you might have heard some of these stories. They've raised a ton of money, and they talk a lot about diversity. But I went to an event in 2019, pre-COVID, an auditorium like this, except bigger. It was 400 people in the room. And you walk into that room, all this talk about diversity, a very diverse panel, and the room itself was almost 100% white. And I happened to be there with some friends and colleagues who were women of color, and we went to dinner that night, and we said, what would it take to actually build from the ground up a women's network that was a multiracial network? And a good friend of mine from Columbia Business School, from Cluster A, is Nikoa Milton. She is in DC today, but I called her up, and she's a Black woman who worked in finance. And I said, what do you think about coming together and finding a multiracial women's network? And she was like, hell no. She was like, I work in finance as a Black woman with white people all the time. Why would I pay money to just be in a multiracial network? That doesn't make any sense. But what she would say is, as a Black woman in this country who did everything right, went to Howard, went to Columbia Business School, she would love to be an entrepreneur, but doesn't have that inherited wealth and that safety net to take that leap. So she said, if we could get a multiracial group together to invest in Black women, I'd be in. And Level was born, and all Level members go through an intensive 10-week course. Kelly was actually a founding member, and she was there in our pilot helping us figure it out, but a founding course where you learn angel investing, you talk about the racial wealth gap, and you invest in a Black women-owned business.
Wonderful. Kelly.
Yeah, great segue. I'm Kelly Ifill. I'm the founder and CEO of Guava, and we are a digital bank and community platform designed specifically to serve Black entrepreneurs and small business owners, creators. I'm a Black American woman, and so my experience with the racial wealth gap is extremely personal. I grew up in Brooklyn and Brownsville, and so all of the research that we are reading now and all the white papers that we have talk about this stuff is like my lived experience. And it's kind of weird to, read your experiences in white papers in this like very academic way, but it also gives me a lot of language to describe things, and also like affirming that, these experiences that I've had, that my family has had as immigrants, as Black entrepreneurs, Black women, that this is not for, it's not unique. It's not anything that we've done necessarily. Like, we have done all the right things. I've, went to Columbia Business School, worked in venture capital, and still ultimately have these experiences. And so, like, that is what motivates me. I truly believe that entrepreneurship is a lever to, create wealth in families and communities. And because of all of the structural barriers put in place, it's significantly more difficult for Black folks to build sustainable businesses. And with Guava, we're just making it easier for folks to get access to financial products, but more importantly, like all the networks and all the resources that you need. Like, there's no tech stars if you're like building a bakery or barbershop or yoga studio. So making sure that folks have the wraparound services and supports to actually scale their businesses.
Thank you.
Great. So my name is Wole Coaxum. It's a privilege to be here. So I started Mobility Capital Finance after the murder of Michael Brown. So that was my George Floyd moment where I was a history major. Just fun fact, the amount of wealth in the Black community is the same today as it was when Lincoln freed the slaves in 1865. So just to give you a sense of the challenges, and we can delve more into that later. But for me, it was, as a history major, watching the community protest happening in Ferguson reminded me of the documentary Eyes on the Prize. That was a very popular and I think one of the most definitive shows on the topic. So looking at what was going on in 2014 felt like what was going on in 1968. And I thought, what progress has been made in the Black community from a wealth perspective? And I think part of what happened in Ferguson was lack of access to resources. And I had a belief that a social justice agenda needs an economic justice agenda if you want communities to move forward. So I had spent 10 years at Citigroup, 5 years at Willis, 9 years at JP Morgan. I was a managing director, one of the most senior people there, and just sort of felt like, I've had a great run. I've been privileged to work with a lot of people, not a Columbia grad, but I'm an NYU MBA grad. And I was like, how can I take advantage of the training to address an intractable problem? And because I had been sitting in spaces for over 20 years where people were really articulate about the problem, but our traditional banking institutions really aren't in a position to solve these problems, which is why you have upwards of 40 to 50% in Black and brown communities that are unbanked and underbanked to this day. And you've got a alternative financial services industry, which is almost $200 billion, which is overdraft fees, which are being impacted. People are bringing them away, but ATM fees. These are all ways to make money from low-income individuals because the traditional banking model of leaving deposits, using those deposits to make loans and providing free banking services, that model doesn't fit. So the way to make money is to feed people. So I decided to not talk about it, but be about it, and started a company to figure out how to address the issues. And so it's a privilege to have this platform to inspire, hopefully, all of you to think about how you might be able to impact this intractable problem.
Thank you, Wole. We will forgive you for going to NYU. But, just to summarize, we have 3 different approaches to thinking about the racial wealth gap and dealing with the structural roots of it. There's network, there's entrepreneurship, and there's access to banking services. 3 themes that have actually come up again and again throughout today's session so far. You talked about the origins of your value propositions, why it connected to your kind of personal motivation. One thing that I think is very interesting for me to hear, but I'm sure for our audience as well, is that when you first start your company, there's a vision, there's a strategy that you settle on, but then there's the execution. And you begin to learn that, there are these other things that I need to learn before executing on the vision itself. And so I would love to hear from you what challenges you encountered early on and what things you had to learn before you began realizing or partially realizing some of your vision. So maybe, Wole, we can go the other way.
Sure. I appreciate that. So I didn't talk about my business. So basically what we've done is we've created a challenger bank that's focused on getting resources to folks and put people in a position where they can go from instability, which we have a whole interesting disbursements platform. There is $1 trillion that comes from the federal government and hundreds of billions of dollars that come from cities and counties to support people. And we make it really easy for people to get access to their dollars. And then from there, we have the ability to provide full demand deposit accounts, FDIC insured, but it's actually geared towards the consumer. We can open accounts for undocumented people. We turn local stores into free ATM networks and bank branches where people can put cash into their account for free. And then at the same time, we've created a wealth building platform where we've created a digital locker where you can take all your financial information and keep it real time, let you see your credit score, and help people figure out when they're ready to buy a house, get a car. So that's our platform. And so when I started, I was like, hey, we just want, got all these people who don't have bank accounts. Let's just open up a banking platform and everyone's going to come running. That's the absolute wrong thing. I mean, the reality is just because you're unbanked or underbanked doesn't mean you haven't figured out a way to work your financial life to the optimal point in terms of how you get access to cash, how you pay for bills, and that kind of stuff. So just creating a new platform is sort of a yawn, right? And it took us a little while to figure that out. But the underlying premise and the long-term goal of how do you bring people responsibly into the financial system remained the key premise. So once we figured out, okay. And the other thing is, for all of you who are aspiring entrepreneurs, when you go and you make your pitches in terms of, hey, I want to raise money, people are going to say, okay, how much is it going to cost you to get your customer, and how much revenue do you expect to get per customer? And when you say to somebody, hey, I think I can make a business that's focused on banking the bottom third of the pyramid, people are like, really? Sure you can do that, and sure you can make money? And so we then had to go into the wilderness, understanding the idea of wanting to getting people banked, but we had to figure out, okay, how can you get to a large number of people at the lowest possible cost that allow you to scale quickly? And so with that, we then had to reimagine. It's not a question of like how Chime grew in terms of buy words on Google and Facebook and stuff like that. It was more about, let's provide a service to government to help them solve an intractable problem that they've got. Because you saw it with PPP, you saw it with all the dollars related to COVID relief, emergency rental assistance, they were having a challenge getting the dollars to the most vulnerable amongst us. We were able to electronify that and provide a real service that they're willing to pay for, and that gives us access to the people we want to serve. So we figured out a model where we can get paid to actually reach the people who we want to bring into the financial system. And then people's like, got it. And that allowed us to then, and I'll give you a quick example. So Mayor Garcetti in LA said, I want to create contactless government. I want a way for people to be able to receive money electronically. I want to be able to have people pay for city services electronically. They got 500,000 people that don't have a bank account. They've got 20% of the neighborhoods don't have a bank branch. They're number 3 in unbanked in the country. We built a banking platform. We white labeled our platform. We call it the Angelino Connect account. And now Los Angeles has a framework for getting dollars for emergency rental assistance. We're doing the largest UBI program in the country. We're now working on transit subsidies. We're now focused on workforce development subsidies. They're paying us to do that. And now we can provide our banking services to people, and we can start putting them towards a path towards wealth. If you had asked me 5 years ago when I started, hey, you're going to be working with city government, I'd be like, forget about that. That makes no sense. But the key is have the vision, but understand. I hate the word pivot, because pivot sounds like you're just moving in different directions at a whim. But your business model has to evolve in such a way that it's sustainable and takes advantage of the market opportunity. And and my colleagues here can say this better than I, but like we start our business, our first office was in a CUNY co-working space a couple blocks away. Like sitting in the CUNY co-working space thinking about what the customer wants, wrong strategy. But getting out into the market and then responding to the need of the market while understanding you're pushing the market to places that hasn't been before is the joy of entrepreneurship and how things evolve as an entrepreneur's journey.
It's very insightful. Thank you. Kelly, maybe some challenges that you encountered, things you had to learn or unlearn maybe?
Yeah, and I love that you positioned it as the joy of entrepreneurship. But it is true. I think for us, we are, going direct to our members, our, potential customer. And the thing that we're trying to orient folks around and think about, like our value proposition, is that similar to individuals, many small businesses are unbanked or underbanked, right? So a lot of folks are operating their business kind of in this gray zone where they're using their personal checking account. I'm sure most of us are paying like the person that does our hair, cuts our like fade by PayPal or Cash App or something like that. And all of these platforms are aware that these businesses exist, but aren't really optimizing for them because there's just not value in that. And on the other side of it, the individual has also found a way to make it work for them, even though it's not working in the best possible way. And so for us, what we're thinking about is, helping folks understand what a true, high touch, relationship-oriented banking experience could be, because for the most part, most of us have these transactional, I keep my money in the account, they give me a card, I use my money, and that's it. But in the best situation, someone has a personal banker, there's someone who's engaged, and they're helping them identify their goals, lower their tax burden, all of those things, if you have enough money. But as an entrepreneur, as a regular person, you don't really get access to those types of resources. But moreover, oftentimes you don't know that even is an option or a possibility for what your relationship with your bank or your banker can be. And so that's what we're trying to help folks orient their expectations of banking to be, so that they can think critically about their TD Bank account or their Wells account, who's not serving them, who's not optimized to care about their business or help them grow their business. They really are just like these transactional relationships. And so I don't know if it's like I think that is like our biggest learning, because I was like, obviously you hate Chase. Right? Like we all do. And no offense.
Ask Kanye West.
And so, of course, if I create something that's like giving people resources and bringing Black entrepreneurs together, like similarly, they'll come, because it just makes logical sense. But like Wole just said, folks figure out how to make whatever product available work for them in the best possible way. So, having people stop and to think about and to kind of do some inventory of their banking relationship, and then say like, okay, well, I guess it's fine, but could it be better? I don't know. I don't have a personal banker. I don't have a wealth manager myself. So like, what could be better? What does that look like? And then doing that kind of behavioral modification from there.
Thank you.
All right, so interesting, the overlaps of all of us, but my approach to the racial wealth gap with Level is about networks. And so when you think about, who do you call when you need a doctor rec, right? Who do you call when you need a lawyer or an investor or a loan, right? And what we've found research that shows you, we all know this from lived experience, right? But it says 91% of white people's friends are white and 83% of Black people's friends are Black. Our neighborhoods are segregated, our schools are segregated, and then our world is really separate. So what happens if you actually start building really authentic friendships and connections and human relationships more across racial lines? Think about the effect on the racial wealth gap, right? Because you can just have a flow of resources that goes back and forth. And I guess a learning certainly is that, my idea of like a multiracial network, I'm so glad. That's why co-founders are great. And that's why diverse teams are great, because Nyko was like, no way. The way to build relationships is doing something together. And so we found that my original idea would not have worked, but in the process of learning investing and doing a Shark Tank-like pitch and debating about which entrepreneur you're going to fund and then supporting an entrepreneur for a year, people really bond. That's how you build relationships, right? You work hard on something together. So that's a key insight that I've learned. And I'll just add the other thing that we're learning as a cross-racial pair. It's interesting because we are cross-racial friends who've been friends since 2012 when we met in Cluster A. And Kelly said it beautifully. As a Black woman, you live all this talk about racial wealth gap, right? But as a white woman myself, I didn't, and it's shocking that it's horrific that as white Americans you can live for a long time without certain knowledge. But I think it would be true for Nykoa too. We're both learning in our relationship about what it's like to have a cross-racial relationship and navigate the racial wealth gap that exists between us. I'm able to do some entrepreneurship because it turns out my grandfather started a company. And at that time, at the turn of the century, as a white man, he had access to banking and loans and support to start a company that Nykoa's grandfather, who could have been a million times smarter and more entrepreneurial and hardworking than mine, didn't have legal access to at that time. And so we're navigating that together, and it's challenging, right? She's incredibly successful, and we've both worked hard, but she doesn't have inherited wealth. And we just wanted to bring up today, we talk about what are the factors today that go into it, and it includes pay and job compensation. It includes housing. She's now an entrepreneur trying to buy a house, and as an entrepreneur doesn't have the W-2 for that process. And so housing, wage, student loans, and I actually talked about this with the Tamer Center, having huge student loans from Columbia Business School and then coming to speak. She lives in DC. Would need childcare, would need transportation, all of that. So the Tamer Center was really open to, I'm gonna wrap up here, but my comments that if we actually want to address the racial wealth gap, we have to think about student loans, we have to think about compensating speakers, compensating Black women, providing childcare. What are all the things that would come into allowing a Black woman to speak here and survive, and it's different than what it takes for me?
So much of what all three of you said resonates with me on so many different registers. Jenny, I know exactly the statistic that you gave about personal networks. I teach in various executive education programs here, and the topic I teach about is about social networks and networking, and one of the modules is about the value of diversity and networking, and people are shocked to hear how homogenous folks' personal networks are, and that's the basis of the value proposition of Level. So much of what you said, Wole and Kelly, also resonated with me in terms of understanding the roots of inequality. One thing that I think a lot about is how all of your approaches are very much complementary in some sense, in the sense that Wole, it's about access to banking, Kelly's about providing high-touch kind of personal equity and also investment for budding entrepreneurs, networks for Jenny. And I think about what Columbia University can do. Well, it's got networks, it's got money, also has knowledge about entrepreneurship, and I think about the many ways that this university can also expand and realize the potential for filling some of these gaps as well. That's a conversation that we can continue to have, but at the same time, I also think about how just providing access, sometimes from the other side, folks will say, well, that doesn't go far enough. So can you talk about other related barriers that, let's say, Black and brown communities face in taking advantage of some of the services that your organizations offer? I mean, what have you learned in terms of the other gaps that you might address in your value propositions? Maybe Kelly, we can start with you and then go to Wole and Jenny. Mm-hmm.
Yeah, the first thing that comes to mind are the prevalence of bank deserts in Black and brown neighborhoods. Mm-hmm. About 70% of all Black Americans live in a bank desert, and so that means that you don't have a bank branch that you're physically proximate to. And that's important. Obviously, it just means that it makes access to those products more difficult to get. But when you think about the process for opening a business bank account, right, it often starts online, but very quickly you're pushed to go to your local branch. And if that isn't, close enough for you to walk to, it means that you're closing shop, taking time, taking a bus, a train, or whatever. Often it takes people literal weeks to open a business bank account because they'll go, maybe they don't have the right paperwork, they have their, EIN documentation isn't right, you do all the back and forth. And so it just means that people are, barred from doing something really, really simple as opening a bank account. And that's the beginning part. We have not even started to talk about what it means to get access to credit, why Black folks are more denied for bank accounts than anyone else because of KYC, know your customer screens. And so, I think about just the physical manifestation of the divestment in these communities and how it kind of has all of these ripple effects. I think, what was the question?
I think you answered it. Right? I was enthralled, but yeah. Go ahead, Wole.
No, just to pick up on that. So all that you've just described, Kelly, I think is the fact that if you believe that the market is efficient, we can argue about that if that's the case or not. Let's just make a simplifying assumption that it is. What you've just described, it reflects the fact that certain industries, certain banks have said, we can't make money in these particular communities. So as a result, we are moving away. 80% of the bank branches that have closed in this country have been in low and moderate income communities. Like when I opened up my business bank account with Amalgamated Bank, they had a branch right here on 125th Street. Within 9 months, they left, we can't make any money here. And I put my money there because they represent banking with values, and they moved out of the community. So if you believe that the market is efficient and that banks would be here in these 60 or 70% communities that are unbanked or don't have a bank branch if they had a business model that was sustainable and could grow. And so that market failure, I think, creates an opportunity for entrepreneurs like yourself, myself. I think the biggest currency that you have as an entrepreneur is your network. And I can give a whole view about that. But the point of the story is it takes a Guava, it takes a Mochify to say, got it. Let's use entrepreneurship. Let's use startups in the venture investment side of the definition of startup to use the technology and the tools to create a model that says, I want you as a customer. I'm going to build the onboarding process, the know your customer process that fits who you are. I'm going to come to you as opposed to have you come to me to open up that business account. And then take advantage of our low cost model, right? So I ran business banking at Chase. I was the number 2 guy there, had all the branches, all the customers. So I know exactly what you're trying to build, and we've talked about this in the past. The cost for a electronic deposit is like 25 cents, maybe even less now. It's probably like 15, 10 cents. The cost for a check deposit at a branch is $4.50, right? So if you're looking at that cost differential and you've got somebody coming in who's just cashing checks all the time, but you can't make any other money on that customer, you're like, sorry, I'm going to leave and put my scarce resources someplace else. But for us, as a mobile banking platform, you put that check in and you're able to then transact and the money's coming in, going out, no problem. We're making money there. I like that customer. So I think part of it is just understanding your customer, taking advantage of a business model that can sustainably support in this instance, the and underbanked, and then build the credibility and the consistency that then builds the trust. And the last thing I will say is I think there's a whole thing that says black people don't trust banks. Well, I wouldn't trust a bank either. If you go back to 1865, when and your dad knows this better, but I was at the Treasury Department last week, and they had the 155th, 160th celebration of the Freedmen's Bank. So Lincoln created a bank, said, hey, anybody, slave, freed slave, anyone who worked and fought in the Civil War, you now can put your money into a bank that's geared for you. It grew like gangbusters. So don't tell me that different communities don't want a bank. They had, I think the number was like 55, 60,000 customers. In today's dollars, it's $100+ billion. It was mismanaged. So within 7 years, 12 years, it went under. And I sort of think that was the beginning of the lack of trust. And then you layer on top of that redlining and all sorts of stuff we can talk about. So communities go where they're wanted. And if companies aren't providing products and services that say, hey, we want your business, we want your dollars, then people are going to go elsewhere or find other solutions to handle their daily needs.
I can jump in real quick on the Freedman Bank. There's a really funny anecdote, funny in the sense, right? Where they sent Frederick Douglass down to go say like, oh, see what's going on with your people and this bank. And he wrote back this like scathing letter in like Frederick Douglass prose that was like, nah, it's not here. Like old guy mismanaged the money. He wrote a bunch of like, made a bunch of bad investments purposefully. And there's nothing to be saved. And that to me was just like, it's like constantly retelling the same story over and over again of, Black people don't like banking or don't know about finance when there's been like this systematic way for, wealth to be extracted from our communities, whether it's done by like legitimately stealing people's cash or, redlining or, bad mortgages in 2008.
Yeah. I can remind you about the question. The conversation is also super interesting.
Well, I think I know kind of gaps that continue. I'll pull a couple things together. One is, I do think the history is so important, right? Because just to continue to do this lesson, right? Slavery ended only 160 years ago. That's like a couple generations back, right? Before that, there were almost 300 years of Black people generating wealth for white Americans, right? And so the inherited wealth I'm talking about comes from 300 years of wealth being generated by white Americans that was passed to their kids and passed to their grandkids, right? And then at the end of slavery, there was the promise of many things, including the 40 acres and a mule thing you've heard, right? And then Lincoln was assassinated, and then the former slaves were left with nothing. So I just want to say a couple things. One is, I do believe in terms of these gaps, there is a policy part of it that's huge and a systemic part of it is huge, including reparations. I strongly believe that actually the government needs to step in where they failed 160 years ago, and then for hundreds of years after with Jim Crow and systemic legal discrimination, right? And so I do think that there needs to be a redistribution. That's a scary term, but there needs to be a payout in that sense. But second, I just want to emphasize something you said originally about the 2 trillion versus 12 trillion. As a white person in this work, it's not like this kind of attitude of like white savior or like I'm going to do something to help is really ridiculous and counterproductive, because our GDP as a company would be 10 trillion, according to your stat, higher as a country if there was equal access. And so that benefits me. That gives me more jobs and my family more opportunities. And so I just also wanted to emphasize a kind of a learning and a gap that I've had in this work is going in as a white person with some savior thing is not helpful. The women in Level are badass women, I don't know if I keep cursing here, across industries and have so many different stories and so much entrepreneur, like Black women start companies at a higher rate than any other group and are the most educated group in the United States. And so just going in with the attitude that there is so much talent there, and if you can tap into it appropriately, that's a huge benefit for us all in this country.
Just to pick up on that, again, we're in a business school environment. It's like just good business, right?
Yeah.
So the idea of bringing, just in the Black community, but it's also true in other communities, but if you brought the Black community into parity from a banking perspective, and that includes investments and insurance and things like that, that would add, to your point, several $1 trillion in the GDP. It might increase, I think the number I saw was like 3 to 5%. There's a McKinsey study that came out a couple years ago that does a very thorough analysis of it. But and there's a great book, I think it's by Professor Heather McGee, called The Sum of Us.
Yes.
And what the big takeaway from The Sum of Us is this idea that it's not a zero-sum game. It's not as if one community does well, it's at the detriment of somebody else. This really is an example where all boats rise. And I just remember, and I'll get the numbers wrong because it's been a couple of years now, but when I was running business banking, sales, and strategy, we had $100 billion plus or minus in deposits, and we had $20 billion in loans, right? And so, you go back to just traditional banking, you take deposits and you make loans. There is, and it's not dollar for dollar, but just for sake of conversation, $80 billion available to lend to a variety of businesses, right? And so, to the extent that, and that's good for, in this case, JP Morgan, because we spent a lot of time figuring out how to make more loans responsibly. But the key, right, was to figure out how to make a $25,000 loan that might be appropriate for a business here in Harlem that's just starting as a bakery, make that loan as profitable as doing a $250,000 loan or a $500,000 loan for a pub that wanted to buy the building in Midtown Manhattan, kind of thing. So it's not a zero-sum game. And if we're able to come up with new models, we can actually ensure that all boats rise. And I think it goes back to this idea that I hold dear, which is an economic agenda with a social agenda allows us to have a thriving community.
It would be so selfish of me to continue asking questions because we have limited time and I want to make sure our audience has time. Do you need an intern? I'm available. Sorry, Sandra, but
might have some spots.
I'm like, yeah, come on board.
Thank you. Good afternoon. I really appreciate all of your comments. I'm very motivated by a lot of what you've spoken about, just around closing the wealth gap vis-a-vis Black and brown business owners who are not on the venture path. I know a lot of conversation is typically around startups and funding startups, but the vast majority of businesses that are started by Black and brown founders are in lifestyle type businesses that do not fit the traditional venture model. Can you talk about some of your learnings in terms of how to address that issue and what it is that people like us who are motivated around it can do? Thank you.
I guess I'll take that since that's our target customer. Yeah, when we talk about Black entrepreneurship, it is specifically focused on Main Street small businesses because most of the businesses that Black and brown folks start are serving a need that's, present in their community or a skill that they have. Often it's in the service industry if we're talking about Black people specifically. And so when we think about those entrepreneurs, it really is understanding what their biggest needs are. It is access to capital, a different type of capital, not venture. And so we're talking about what does it mean to be loan ready? How do you ensure that your QuickBooks is up to date and you have a P&L that, is getting you to the point where you can apply for a loan? What are some other pools of capital that you can get access to, like grants, for example, which kind of leads us to getting the MWBE certification, which many grants have a requirement to kind of prove that you kind of fit the criteria. And so those are all of the things that we're focused on and building into our model. But I think, more broadly, it's most important for us to make sure that we're constantly talking to the entrepreneurs because, those businesses are often like existing at the margins, right? Like there are all the studies that show that, they have a month or two of cash in the bank before they're insolvent. And so, that's not a lot of money. It's not a lot of time. And so making sure that we can do whatever it is that we can, think through to help them ensure that that month or two is expanded to 3 and 4, and that they're making, really good financial decisions to help expand their business.
Yeah, just to pick up on that for sure. Like, we shouldn't have venture conversations for most entrepreneurs. I mean, I know that could be a little controversial, but not to say that people shouldn't be venture-backed companies. But it's 90% of the businesses in this country are solo entrepreneurs, or they hire 1 or 2 other people. And the reality is, wealth is created if you got to own something, whether it's stocks, a home, or a business. And the business is the best thing to do it. And I think there's a couple things. I think everyone should be thinking about in their community, what is the service that I can provide that I can make some cash doing, right? And Guava just becomes like the proverbial icing on the cake to be able to move that forward. But you just think about how most businesses get started. It's a loan from the family. It's everyone sort of pitching in. It's getting credit cards and going out on credit card debt, which is I'm not encouraging people to do that, but that's how a lot of businesses get started, or borrowing against their 401k. And it's not like Black people don't have an entrepreneurial mindset, right? So if you look at the Green Book, so people saw the movie The Green Book, but if you know the history of the Green Book, they created a book in I think the company started in like 1935, 1936, where they had to publish the addresses in homes in the South where Black people could stay, because they couldn't stay in the hotels. So let me get this straight. I call ahead, or I show up and I know there's a place that I can stay in somebody's house and get a meal. That sounds like Airbnb to me, right? So we have the ability so the entrepreneurship is in the DNA. I think we need to encourage people, we need to be supportive of it, and we really need folks who can start these small businesses, because that's where the rubber hits the proverbial road. And then you can go to companies like Guava, come to companies like Mochify and others and say, hey, I'm ready. I've built my credits in the right spot. I've got a business plan. We need to really encourage everybody. Like every Black person I see who's asked my opinion about this topic, I say, you got to buy a house, start a business, or work in a company and you can start buying some stock or something, because that's what's going to make the difference. And we really need to encourage this non-venture backed entrepreneurial ecosystem.
Yeah.
Hi, and thank you for having this session. So the history of persons of color in the United States is complex. We're looking at something like 400 years of oppression, slavery, discrimination.
Yeah.
And undoing all of that is, of course, a complex task. And I find it fairly amusing and sort of an ambitious process for the private sector to take on this role, to undo 400 years of institutionalized racism and discrimination. My question is, in the United States, the conversation on closing racial wealth gap has largely been in the private sector. And for the private sector to take on this role, it's difficult. You're trying to undo 400 years of discrimination. What kind of support do you expect and do you see from the government to sort of partner with the private sector to undo this? I'm sure many of you agree that for the private sector alone to do this is perhaps impossible. And if you look for some support, what kind of support, and have you been getting it?
I have lots of opinions, but go ahead. I'll let you go.
Well, I'll just say some super high level, because I think you're literally working with governments, as you said, in Los Angeles. But I mean, I just back to what I was saying around, I mean, it's going to take massive political will. We're not there yet, but just using the word reparations, having that be in our vocabulary, which is the payment. But then, you know, there's been all this talk around student loan forgiveness, that obviously that's a little complicated. It's not directly affecting the racial wealth gap, but student loan, what was I going to say? You know, there was, some people said that the recent childcare subsidy that happened in government actually did have a distinct impact, and then it has expired. So I don't know, I was just saying there are these big buckets that I do believe we all need to have, just make more regular in our conversation so we can bring those to our elected leaders. But I will, Wole has more experience, so please.
I don't know if I'm more experienced, I just have a lot of opinions. So, so I think government has a role to play where there's a market failure, right? And to the extent that you've got a wealth gap that we've just talked very articulately about for the last 45 minutes, it exists, and that's a market failure. And oh, by the way, we used to have postal banking in this country. And when we had postal banking, we did not have a banking desert because there was a post office in every corner in this country. I'm not suggesting we go back to postal banking, although some people believe that's the case. But the point is, that's a role that government can play in terms of, and to be fair, the Biden administration is being very aggressive in a lot of different areas, whether it's the various agencies, whether it's the Treasury Department, thinking about how to use its platform to address these issues. And we're talking to the Treasury Department about how we can use our platform to give everyone access to electronic access to federal dollars. But just take in the city of New York, I'll get the number wrong, but I think there's like $20 to $30 billion that has been allocated for MWBE spend. And what you learn as an entrepreneur pretty quickly, yeah, capital is important, but revenue is even more important. And so if I've got revenue, I can get capital. And every government is spending money on something, whether it's pencils, whether it's on environmental issues or whatever, it's just pick it. And so I actually think government can use its spending power to provide top-line growth to diverse businesses. And that will go a long way to helping build a greater ecosystem. And I also think that government, you don't have to be ashamed about that. I mean, if you do the history of like FedEx started because they got an SBA loan to go out and start that company. So government, I think, has a very important role to play, and I think it's in partnership with government, it's in partnership with the private sector. I'll give you another example. In Alaska, I think every resident in Alaska gets like $1,000 subsidy, which is a carryover, which is a result of the oil revenues that come from its ability to generate oil there. And that's been going on for a long time. You've got different cities across the country, LA, for example, is doing universal basic income. $1,000 a month to 3,000 families, that's a government-driven program. That's getting beaten up when people in Alaska are cashing their $1,000, $1,200 check a year, which is essentially the same thing, right? So government may need to reevaluate, and the Biden administration is thinking about this, because the people that are part of that have been thinking about this for a long time. Direct cash assistance has been proven to be a way to help people move forward. It's working in Alaska, no problem. Now we're trying to do experiments in different cities across the country, but I think, so there are multiple roles that government can play. The big one in my mind is where there's a market failure, government can step in, act as almost like a startup investor to get things moving, so then the private sector can kick in and take it over.
There's a question right here.
Oh. I think we have time for two. Let's see how far this question goes. This could be the last one.
I'll try to keep it short. You guys are, both exemplifying the power of building through a Black lens. And, when you're talking about, pushing government to make those changes, but also, private banks like Chase to change their practices, how important do you think it is for Black leaders to continue to build sort of in their own ecosystem versus kind of pushing those larger institutions that have a wider footprint to change things as well?
I don't think it's an either or. I think both have to happen. Guava is tiny in general, and definitely tiny when you compare it to large institutions that have been around for hundreds of years. I think the role that smaller companies play is creating a little bit of a tide change or a sea change, where it creates an opportunity for folks to think about whether it's like lending or transacting differently in different communities and start to be kind of a standard bearer for that change.
Yeah, I think that's right. I think one of the things I learned when I started at Citigroup was how important it is for people to focus on how much people focus on their own communities. You talk about the level of homogeneity that exists in terms of friendship bases, that then translates itself into also who you work with and who you support, right? And so that means that it's great for, one level, it's great because people in the Black community want to support each other. I could make the argument that the Civil Rights Movement was the worst thing that ever happened that integration was the worst thing that happened to the Black community, but that's for another conversation. And I could argue that. I don't necessarily believe that, but I could argue that. But the point of the story is you need communities to support each other, right? And you need folks to really invest in their own communities. At the same time, what you're seeing, particularly in this post-George Floyd moment, is big companies, medium-sized companies and small ones, are saying, we see this problem, similar to what Jenny's talking about, and now we want to figure out how we can pour our resources in to support this long-standing problem. What better place to pour your resources into than a Guava, who comes from the community, understands it, and is working and needs the platform to be able to do that effectively. So I think it's definitely an and there's great opportunity there. One more question, maybe? We've got 1 minute.
I think we can squeeze a quick one in there.
Right here?
He's been.
Sorry.
Thanks so much for the wonderful sharings. The question about equitable economy, just kind of wondering, when we're giving those loans to those small SMEs and people who are starting business, what kind of sector do they mostly start with? Are they still staying very traditional and kind of mom and pop shops investments, or do you see a growing economy or sector which can be a great potential for them, and through the lending, you lend to them, they can really grow and become much more important and more critical in terms of the economic development?
I want to make sure I understood the question. You were asking about the types of businesses that we're seeing and like the economies that are forming, the new economies that are forming, or?
Yeah, maybe which sectors, maybe without capital, it's very difficult for them to start it, but because they have more financial capital access, maybe what's the growth sector maybe they can develop their labor skill, develop their knowledge, which is something they really can break into and become much more successful.
Yeah, we're seeing businesses that are in like traditional economies, but there's a lot of e-commerce. I think because it's so much easier to spin up businesses, a Shopify store, et cetera. But I don't want to like discount the need for local businesses serving communities, because like we all saw that during the first days of the pandemic when everything closed and kind of our world stopped because we couldn't get a bagel or a cup of coffee. And so I think there's growth, but it's a matter of having sustainable businesses in both old and new economies. I think there's one more question.
Did you have retention rates from those activities that are building each of your businesses? Are you cross-pollinating among your organizations? And too many questions in one. But just this idea was, in climate change, they talk about harm in the nations that don't create the harm. And it's a very tough subject, reparation. Right. But it sounds from what you're saying that there are a lot of inroads that are established now, and from all of your expertise and efforts and through the private market, there's a way to address market failure.
Right. So short answer is that if you think about the amount of PPP dollars that happened in the course of like 12 to 18 months, it was like $1 trillion, I think, or something. And that demonstrated the ability the government can lean in and move a lot of money quickly. And so that created opportunities, because to the point made earlier, it demonstrated that there were cracks in the system because not everybody got access to it. And so we've been able to take advantage of that to build an ongoing business, plus the support coming from the private sector.
There are lots of opportunities to continue this conversation. Thank you so much for your engagement. I believe there's a lunch now on the 3rd floor. It's just 2 flights up. Join me in thanking our panelists today.
Thank you.